Today's market is telling a story, not just with numbers, but with two very different themes playing out at the same time. Bitcoin is rising toward fresh highs, while the euro continues to struggle against the dollar. That's the story of risk appetite and safe haven flows in real time. In this video, we'll break down what's happening right now and how Tahlil Plus could have helped you navigate these moments with confidence. Bitcoin has been on a strong run, testing levels near $97,000, one of its best performances in weeks as markets react to easing inflation fears and macro stability. At the same time, last July, Bitcoin has also hit a new all-time high against the euro, signaling that crypto demand is strong even when measured in other major fiat currencies. But here's the nuance. While price strength grabs headlines, traders know price doesn't move in a vacuum. Volume, risk sentiment, and macro catalysts like geopolitical headlines or central bank policy meetings all shape real moves. Tahlil Plus analysis would show not just the price levels, but also the structure behind those levels, helping you see if this strength had verification support or if it was merely headline-driven trading. Bitcoin's current rise is not purely random. Analysts have pointed out that geopolitical risk and macro sentiment shifts, even outside crypto fundamentals, can provide temporary safe haven demand for digital assets. At the same time, technical analysts are watching breakout scenarios near key resistance zones. Some argue Bitcoin could see higher momentum into late January as volume picks up or as macro catalysts, like FOMC decisions, occur. Knowing why the price is reacting helps you plan, instead of just reacting. With Tahlil Plus, you can compare probability-based forecasts and backtest scenarios so you're ready before the big levels flip, not after. Now let's shift to euro to US dollar. Recent technical analysis shows the euro has faced persistent selling pressure against the dollar, with broader trend weakness reflecting macro divergence between the US and European economies. But markets are not linear. There were shorter-term rallies when the euro strengthened modestly near key ECB news events or temporary dollar pullbacks. That means opportunities can appear on both sides, but only if you're filtering signals from noise. Here's where Tahlil Plus stands out in a news-driven market. When Bitcoin headlines break, like surging to new highs, many traders either jump in too late or sit back too long. With Tahlil Plus, you see structured probability analysis that complements news context. You get a sense of why a move has strength, whether it's backed by trend confirmation, momentum, or risk events. Same for euro, USD. Instead of just hearing euro weaker or dollar strong, you get measurable trend context and key zones, so you can plan entries, exits, and risk levels instead of reacting emotionally. That's the difference between trading headlines and trading with confidence. Imagine today at 97,000 Bitcoin price, someone posts the news first and every social feed lights up. With Tahlil Plus, you see whether that level is a real breakout or a potential fakeout. You see probability ranges, structure, and risk zones. You compare multiple analysis variants with ranks. You reduce guesswork and avoid emotional moves. Same with euro, USD. One headline might say, "Dollar strong today," but market context could show that strength has no follow-through outside a narrow time frame. You don't need more news, you need verified insight. So what should traders watch next? Bitcoin key levels, whether 96,000 holds or if volume supports extension, treasuries and macro data that could feed crypto sentiment, euro USD reaction to inflation data or central bank signals. And remember, news alone isn't a signal. Structure, probability, and context are. With Tahlil Plus, you don't just see the markets, you understand them. Today's headlines are powerful, but the traders who truly benefit are those who verify before acting. Today's Bitcoin strength and euro to USD trends matter, but what matters more is how you interpret them. Stay informed. Stay strategic. Trade with clarity.